The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning. Good morning, folks. Welcome to the December 13th, the fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day, and let's make sure we have an extraordinary one. Now, the easiest way to do that, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know that I'm absolutely grateful for your presence here. But more important than that, and that's this, during this next 53 minutes, I am here to serve you. So feel free to pick up that phone. You can dial on in at 877-927-6648. Well, actually, you can't. Here's what you got to do. You got to send me an email. Send that off to steve@tfnn.com. Send it off early if you would. And inside that subject heading, just please put radio show question. Of course, inside the Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on Fantastic Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Quite a mixed bag out there. The Dow just went slightly positive, and I do mean slightly. S&P's off 12. NASDAQ 100's is up 32. Russell's down 19. Tranny's up 70. Semi's up 92. Gold's off $27. Silver's down 61 pennies. Light sweet crude is up 80 cents. Natural gas down 13 cents. 30 Treasury's down 22 ticks, print out 116.18. Our leaders in the clubhouse to the upside. Restoration Hardware up $49, nearly 13%. Broadcom up $36, 20%. Progressive Corp up $11, 4%. Bank of Montreal 8%. I'm sure $8, 1 3/10%. Elevance Health is up $8, 2%, and Marvel Technology up $7.60. That's a 7% move to the upside. Our shakers to the downside, led by Mercado Libre, off $46, 2.5%. ServiceNow is down 27, 2.5% there. Intuit's off 16, 2.5%. Netflix is off 14, 1.5%. Meta Platforms is down to about 13. That's a 2% move. So we got movers and we've got shakers. We'll begin our day. Take a look at the oversold conditions that the market has gotten itself into. If we take a look at the New York Stock Exchange, we look at the advanced decline oscillator. That's the difference between the 39 and 19 period of its exponential moving average of the advanced decline line. The advanced decline line is one that's just above it. We are now in the minus 150 level. If this is where we close, we will have officially gotten into oversold territory for the markets. What's that mean? That means we should go take a look at what kind of signals we have out there for the different instruments. So oversold as we speak right now at 11:09 in the morning. Will we be there at the end of the day? I do not know. Spot VIX index is rising, but still well below its 50-day exponential moving average. The spot VIX right now, the 50-day is at 1591, and we're trading out at 1411. So it somewhat neutralizes it, but the spot VIX is really in more of a bullish position than a bearish, and now the advanced decline oscillator is now in a bullish condition. You can take a look at the last several times we've been down in this minus 150 level. We were down here during the October 31st time frame. Obviously, we bounced out of there very nicely. We got down below minus 150 where we're at today. Back at the lows of August the 5th, we bounced out of there very nicely. We had another one when we got down to the lows here in June. And actually that was a low, and we rallied for it looks like a couple of weeks out there. You go back, test the one prior to that. That would have taken us to May 29th. That was a bottom. We basically rallied and moved sideways out there. You kind of get the picture here. It's a very cool indicator. It's a very cool tool. At this moment in time, at 11:10, it is telling us that we are in the oversold condition. So as we start going through our charts out there, we're going to want to take a look and see what they are communicating to you and I. In fact, I'm going to open up a set of charts here. Normally, I'm looking at the futures contracts with you. I'm going to go ahead and open up the daily indices. I just want to take a look and see where we're at. There. It should have been easier for me to find it than it is right now, though. I was kind of multitasking. And Steve is somewhat a decent multitasker out there, but maybe talking and concentrating and thinking about things aren't necessarily the best phases for me. In any event, I'm just waiting for these charts here to populate. We're going to go ahead and move over there right now. We're going to take a look at the daily indices. We'll come back and take a look at the equity futures and intraday and all that kind of stuff, everything that you normally like to take a look at. But we're looking for, is there any bottom patterns out here? The Dow Jones itself, the upper left-hand corner, the charts are still popular here. Bar number 7. There's no bottom signal there, but you could get a bottom pattern between Monday and Wednesday of next week. If you look at the S&P 500, really it's got that TD9 count, Rhodes momentum indicator top, and just been a sideways move. So not much there. The NDX 100 needs a bearish reversal candle to confirm any kind of a top out there, and as long as price remains above 21,584, it's in all-out bullish mode out there. The cash indice, that is. If you look at the Russell 2000, the Russell 2000 cash indice is going to be in bar number 7 today, so no bottom signal there. But the New York Stock Exchange, how about that? We were looking at the oversold conditions that is made up of the New York Stock Exchange advanced decline line and how that has gotten into the oversold condition. And look where we're at right now. We will complete in the New York Stock Exchange a TD9 count bottom today. We also will complete a TD9 count bottom pattern inside the Dow Jones Transportation Index out there. So those are two bottom signals, clearly bottom signals, especially as we are in an oversold condition. Now let's move from here. Go take a look at I'm going to do this here one step at a time. What I mean, what the hell does that even mean, Stevie? Here's what it means. It means here's the Dow. We're going to look at the 4 different instruments that most people use to track the performance of the Dow out here and to trade the Dow. One of those being, I'm going to go all the way to so here, we'll take a look at the Dow. We don't see any bottom signals. We're in bar number 7 on the future contract, bar number 7 on the cash indice, bar number 7 on the diamonds, only bar number 5 on the equal weighted ETF. So the Dow is just saying, well, okay, maybe not, maybe early next week before it forms a bottom. Let's move on to the next set of 4 charts out here. That next set being the NQ. Well, in the NQ, if we were to get a bearish reversal candle, For the NQ, the only potential topping pattern would be a sell the D point top, and that requires a bearish reversal candle at day's end. In the case of the NDX 100, it's triggered a Rhodes momentum indicator signal, so bearish reversal candle would form a sell the D point as well as a Rhodes momentum indicator top. We don't have that there. The Qs, it would be the same thing, and in the case of the QQEW, actually, it's not held up as well as the NQs. We talked about this earlier. It's really those top-weighted instruments that are truly holding up the market here. But really, the equal-weighted ETF is doing pretty good today. Here, let me do this before we go to the break. Let's take a look at the other bottom that is out there with certainty. We can take a look at the sectors as well. If you take a look at the Russell 2000, what do you see when you take a look at the equity future contract? What do you see when you look at the IWM? TD9 count bottoms are forming today, and we're in oversold conditions. Steve Rhodes with TFNN.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. So we're talking about some TD9 count bottom patterns. So we've got out there one on the New York Stock Exchange. Can't be traded, but it's a really good signal as we've come into that oversold condition. The Russell 2000, 2 of the 3 instruments that we track, not the cash indice, but the equity future contract and the IWM, both will complete TD9 count bottom patterns today. So those are worth monitoring for sure. To finish that off, we take a look at the S&P 500, S&P 500 daily. TD9 count is still out there. Rhodes Momentum Indicator top, same. That's for the cash indice. It's a TD9 count top on the equity future contract. The SPY's got both tops out there. And if you take a look at the RSP, so this is kind of interesting out here. And usually the equal weighted ETF is the one that signals to us the direction of the market. So this is going to be helpful to both bulls and bears. I can't tell you which way this is going to turn, but what I can tell you is this is like having the signs, in the World Series of the pitches out there. And even though you've got the sign that somebody's going to throw a fastball, doesn't mean he's going to hit it. But what it does is it provides you with an edge. Well, so now knowing that the equal weighted ETF, so we looked at the IWM and the Russell. We looked at New York Stock Exchange. Those are signaling some type of bottom. Now, the cool thing about this on the equal weighted side is that, and we can even see here how the equal weighted side is held up versus the SPY. So it's a top sector, it's a top weighted instruments in both the S&P and the NASDAQ that are truly holding the markets up at this stage of the game. So the thing about the RSP is that whatever today's low is, and I don't know if the low is in or not, but you can mark it. You go back and you take a look at it, certainly over the weekend. If we start trading below that and close below it on Monday, it tells you about a strong momentum move to the downside. And then, one cold can lead to a flu, and that would suggest that the ES Mini would more likely target the 6022 level, the bottom of its profile. We're not there just yet, but that's the cool thing about, having the equal weight TD9 count bottom pattern that is out there. So that covers the instruments with regard to the 4 horsemen that we monitor out there. If we take a look at what do I want to take a look at? I tell you what we're going to do. I'm going to go to the requests that have come in thus far because I don't want to get too far behind on that. And then we can, maneuver around, take a look at some intraday trading out there. So let's go to the first request. Coming from Brent in Martinez, California. Brent has taken a long position inside of ticker symbol SENS. SENS right now is trading at 44 cents. Brent has had some real nice movement in this, as you can see off of the bottom. Wasn't a daily signal that provided the bottom out here. You did get a bottom change in trend signal, both on the trading day of December the 10th as well as December the 11th out there. We've had 4 days to the upside. Let me just open this up out here. How often does this have 4 or 5 days to the upside? Not too often. The last time was back here on July 12th. That led to a little bit of a retracement. So that would make sense, Brent. We're at 5 days to the upside out there, even though it's sold off a bit. So it does look like, just simply with regard to the tempo, right? The tempo, the cadence, the pulse. We're going to try to factor in on maybe one of those words. I'm trying to figure out which one really really flows off my tongue, so to speak, out there. So you are looking for resistance and support levels. Well, on a daily basis, we're above resistance areas out there, profile that is. If we take a look at the weekly time frame chart, here's where we really get the piece of information. And what we can see here, Brent, is 48 cents has been a real struggle area ever since the week of May 24th out there. We've seen a couple of rallies into it. For example, back on July the 12th, we saw another rally into it the week of September 20th, and now we've got another rally into it. What you'd really love to see take place today or next Friday or the Friday after that is a close above 48 cents. 48 cents is where a counter trend rally would come to an end. Right now, that's what we have to call it. It's just, you're 44 cents. Does 4 pennies make a difference, Stevie? My answer to that question is yes. It's a difference between swinging at if you knew what the fastball speed was going to come at, it might be a little bit easier to hit. So in any event, 48 cents is going to be a real key thing. Now, I think that longer term, you really may be in on something out here, Brett, because you've got a nice TD9 count bottom pattern. In fact, if you take a look at the last time this thing rallied, it formed a TD9 count bottom pattern on bar number 9 on November 2020. And then it just simply took off to the upside. Nice big move. This thing went from about 40 cents all the way up to $5 and change out there. And then it's backed off. And now what we have here is last month was a TD9 count bottom pattern out here. And you've got the same, bullish or reversal candle. That's not that you need one. You don't need one. And so what this is suggesting, Brent, is that you've got resistance. I think it was, 48 cents, whatever number I gave you. And now you've got additional resistance at 65. And then above that, you would have another battle, which would be the top of its monthly profile at 93 pennies out there. So let's pull this back again. 48 cents, that's that weekly thing. The daily time frame says you could expect or anticipate some kind of retracement over a couple of days out there because this is the 5th day to the upside. So that's what I see when I take a look at SENS. Brent, I hope that helps you out, and thanks so much for your request out there. SatP would like to take a look at Uber. Let's pull their charts up here. And Uber right now trading out at 61.02, trade below profile, trading below its red oscillator and change line. Daily says lower price. Lower to where? Well, the only thing I've got here is I've got a little bit of a breakout. It was a nice gap to the upside on the day of August the 6th out there. There's 53 million shares. You're pulling back into it. A couple of days ago, you were with, 71 million shares going into 53. Okay. So that is a signal. You're pulling back into a breakout level with volume. That would suggest to Stevie that price should go close the gap and it should at least test that swing high from August 5th. And that's at the 58.65. It would appear to me that that's where price is headed towards, is that swing point, whether it's to fill the gap, whether it's to test low. That I don't know. If you look at a weekly time frame chart for Uber, we are trading below profile support at 63.06. If we close below that today, what it does is increase the odds sat of getting back to 57.85. That is its TD9 count breakout level. It's a strong breakout level. It's been tested and rejected. It did that back in the time frame of August the 9th out there. If we look at a monthly time frame chart, Uber has a confirmed Rhodes momentum indicator top. Price now is trading below the bottom of its monthly profile. That's at 64.49. It's only the 13th, so I don't know where it's going to be at the end of the month. But if it does close below 64.49, that's not a good sign. Because we're trading below that, it really increased the odds of that test to 57.85 out there. So that's what I see, Sat. We take a look at Uber. I hope that review helped you out. You also had a second instrument that you wanted to take a look at, OKLO, the OK Ranch out here. OKLO is trading out at $18.42, and it has a TD 9-count bottom pattern that formed 2 days ago. So we take a look at Okla. The key level, the key low that you've got out here is the low from December 11th. And that low out there is 1790. It closed below 1790, and that's telling you about a strong downward momentum move for OKLO. You had that TD 9-count bottom pattern that completed 2 days ago, and yesterday price rallied right up into resistance, the bottom of that profile, 2006. Not the best of signs out there, but you do have that TD 9-count bottom. Continue to watch that low out there from a couple days ago. On a weekly time frame, price is trading inside its profile, below its green oscillator and change line. That tells us that it has lost its momentum. If you lose your momentum, maybe you go back and you test support. In this instance here, it would be at $15.99. So if, in fact, price takes out that TD 9-count bottom pattern, and it may, that low at $17.90, then we would likely take a look at price getting back to $15.99. If $15.99 doesn't hold, then we'd be looking at $14.46. That would be the bottom. That would be the top of its monthly profile out there. So that's what I see when I take a look at the Okla. This has a 30-minute TD 9-count bottom. Let's explore that real quick here, Sat, before we go off to break. And that TD 9-count bottom is still in place out there. But if you see on a short-term basis, close below 1807, that would suggest lower price. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The consistency you're looking for is closer than you think. One or two adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the second and fourth Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. Dow's up 8 points. S&P's off 5. NASDAQ's up 80. Russell's down 15. The semis are up 112. We got a pretty good mixed bag out there. A couple requests to take a look at the GDX. We looked at this yesterday. And yes, JK, it failed. Of course, we know the GDX is very much directionally tied to gold out there. So Ron wanted to take a look at gold. So we're going to kind of tie these both together here. So the GDX, it now on a daily basis is trading. It's giving up that red oscillator and change line. That's not a good thing. Typically, when you're trading below that, that says that we would likely head lower. Head lower would be that swing point from the trading day of November the 14th out there. 34 million shares on that day. So far today, we've come down with about 7 million shares in 2 hours of trading. That's about 21 million shares. Now, it's possible that the GDX is signaling to you and I that it may form some type of short-term bottom, some type of bottom here. If you look at the 195-minute chart, we're back at its breakout level. The same thing on the 130-minute time frame chart out here. No other bottom signals with regard to the GDX. So let's move from this set of charts and go take a look at gold and try to tie all this together here. We'll take a look at the multi-time frame set of charts for gold. We'll have those up on your screen here momentarily. Stevie just blew right past it. Here we go. So here we're going to see monthly, weekly, daily. Then we got the 30, 60, 120, the 240, and the 5-hour time frame chart. So let's start from an intraday standpoint. Well, first let's start with the daily time frame. Gold earlier was trying to form a new profile. That new profile has gone away at this moment in time, and price is now pulled back simply to test the top of its daily profile, 2671.30. A key number at this stage of the game. As long as price remains above that, well, then the A to B equals CD pattern we're looking at is still in play out here. If we take a look at the 30-minute time frame chart, it has completed a Rhodes momentum indicator bottom pattern. It did that at 11 o'clock, so it's kind of lining up with what we looked at on the GDX charts on there maybe it was a 130-minute time frame or a couple different time frames out there. Now, price is trading with inside its new profile. That new profile on a 30-minute basis has support at 2675.30, resistance at 2686.30. If price is able to close above the center of this profile, and the center line is at 2679.70, so 26, where it's 2679.70 right now. If we can close above this on a 30-minute basis, odds favor we make that move up to 2686.30. On a 60-minute time frame, you've got a TD9 count bottom. You have a Rhodes momentum indicator bottom. So the TD9 count bottom is going to complete at 12 noon. It's 11:33 right now. You could also, if you have a bullish reversal candle, which is pretty easy to do because that last candle, bar number 9, was a true doji candle out there. So any close above that is going to generate a bullish engulfing candle out there. Its level of resistance out here, and there's a couple of them, so let me give those to you, is at 2684. That's the oscillator and change line. 2685. Let's just make it 2685.80. That's your first level resistance. Second level is 2688.60. That's a bullish structured profile that we've been below for more than 2 consecutive sessions. So you need to see price close above 2688.60 on a rally to suggest that we're really headed higher and that it's something more than just a counter trend move on the 60-minute time frame chart. A close above 2688 brings 2697 or 2711 into play out there. Of course, we take out the TD9 count bottom on the 60-minute basis. That would mean the low of the trading session so far. That's at 2673.10. We likely head lower. Head lower to where? Well, you got this 2671 on the daily, so if you break through that, you'd be looking at 2635. You have a TD9 count pattern that is going to go ahead and confirm out here at 2 p.m., or likely confirm at 2 p.m. on the 4-hour time frame chart. And nothing here on the 5-hour chart other than price testing that breakout level of 2684. So intraday, you do have gold that is trying to bottom. You should see the GDX rally as well with it. They're directionally strongly correlated most of the time out there. And now it's time to see, is this just a little bit of a counter trend move after the last 2 days, which we've seen pretty nice moves to the downside inside of Goldilocks? I don't know the answer to that question, but we're going to find out the answer to that question here relatively soon. So I hope that helped you out, both with regard to the GDX and Goldilocks. If there's any additional information that you folks need, just please let me know. Marvin, I'm going to close this chart out because it's taking up some resources out here. Got a few charts I probably ought to close out. Let's go take a look at Berkshire Hathaway. And this for Starvin Marvin. And not that I know if Marvin's starving, but sorry about that. Let's go take a look at Berkshire Hathaway nonetheless. Where did Stevie put that? That wasn't it. It was close, but no cigar. Is that it? It is. So now we take a look at Berkshire Hathaway. And Marvin, good spotter out there, by the way. You want to take him hunting with you. Why? Because he was the one that identified the TD9 count bottom inside of Berkshire Hathaway. So I think you're just looking for confirmation there, and you've nailed it. Today is the day following bar number 9. So it's kind of interesting out here, right? Markets are at over... so certainly they were when we came on the air at 11 o'clock using the New York Stock Exchange Advanced Client Oscillator, and it's at the minus 148 level. But, if at the end of the day, it may not be anywhere near minus 150, and then it would not be in that oversold condition. But nonetheless, you're getting all these other signals out here. Here you've got Berkshire Hathaway with a nice TD9 count bottom. Wasn't it the RSP, is my recollection, that had the TD9 count bottom pattern, but the ES did not, the SP cash did not, and the SPY did not either. So interesting that this is also lining up with a bottom signal here on a daily time frame. Now, what should unfold here, Marvin, is price should rally up towards the bottom of its daily profile. So the rally should take you towards 468.67 or thereabouts. On a weekly time frame, you've got a TD9 count, a Rhodes momentum indicator top, and price trading just below the center of its bullish structure, a bearish structured profile. So ideally, you'd see Berkshire Hathaway close back above, hold the 461 level. When it closes below that, but you've got the daily TD9 count bottom pattern to go with Berkshire. Monthly, you can see that the oscillator and change line is held as support. That is a very key level out there. So it really does look like Berkshire is getting ready to rally. Shoot, this thing is traded down for 5 consecutive days out there. 5 to 6 consecutive days. So Berkshire getting ready to rally. Marvin also wanted to take a look at Apple. So let's go take a look at Apple, or at least I believe that you did if I read your email correctly. And with regard to Apple, you also nailed it in that it does have a TD9 count top. Now, that TD9 count top formed a couple of days ago. However, in this instance here, Marvin, the actual signal is neutral. The reason it's neutral is because price remains above the top of its daily profile, 244.63, and just a smidgen away from that is the green oscillator and change line, which it is trading above, 244.87. So it's neither bullish nor bearish. Support is holding. You're trading above resistance, but you have a top. You've got that TD9 count top. How does that get resolved? I don't know. If we do close above the high from December 11th, and that's at 250.80, we're off to the races, which, by the way, is what the weekly chart is telling you, that's what it wants to do. The weekly chart needs a bearish reversal candle to confirm a Rhodes momentum indicator top. We're in bar number 8 on a monthly basis. That says you could get a top in Apple between this month here, December, and February of next year out there. So overall, the charts, quite frankly, on Apple are relatively bullish, but you still have to recognize that TD9 count top that's in play out there. Steve Rhodes with TFNN. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pros pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We're taking a look at the charts here for natural gases for Ron, inside our Tiger's Den. And, boy, it sure looked like it was going to make a run yesterday for that 363 level. It still may do that. 363 was the top of its profile. We closed above the center of that profile yesterday as well as the day before. But right now, we're trading below the bottom of that profile. It's a bullish structured profile. This is at $3.30. Ron, as you know, I believe you know, I've got 2 different sets of profiles for the January contract. One on my black background screen. So let me take a quick peek at that as well for you. What is that signaling to us? So that is signaling to us that price might want to make a run for the bottom of its profile, which is down to 304. Here you can see we're trading below 330, the bottom of the bullish structured profile on the white background charts. I can't tell you why. Sometimes we get these different profiles. It's using the same data, but sometimes we do. And I just simply, how I have dealt with it is I use all the information I can get out there. So at this stage here, it closed below 330 would then suggest that price would move to test that green oscillator and change line. And that would be at the $3.23 level. So watch 330 at day's end. You close below that, increase the odds, will move to the 323 level. Let's go look at now the intraday chart, see if we can get any information out of those. The 5-hour time frame chart, let's make sure we've got this populated out here. It is trading below profile support at 331, so that is suggesting lower price. The 4-hour time frame chart at 331 is also the bottom of its profile. We're trading below that. That could open the door for 307. On the 120-minute chart, you're watching this little swing point that took place at 10 in the morning yesterday. It closed below 3.349. That's going to suggest that we move lower, probably towards 309.8. The 60-minute time frame chart trading below profile, no support. We're in bar number 6 as we speak. That could be suggesting 318. The TD9 count for the 30-minute time frame. This is where the rubber meets the road. Why? Because we are now starting to trade below that. This TD9 count formed at 11:30. It's 11:44. On a 30-minute basis, if you do close below 3.294, and that's at 12 noon, then you have negated that signal, and that would tell you that you're headed to lower ground out there. So watch that. I think it's the 30-minute chart that's going to give you your biggest clue here in 16 minutes, and watch that level of 3.294. So, Ron, I hope that gave the information that you were looking for inside of natural gas. As always, thanks so much for your request out there. The only other request that I've got that I know of is XME. So if you're inside the den, you're listening, and you've got something you'd like me to take a look at, by all means, please go ahead and just poke up the symbol in the in your dialog box, and I'll be happy to get to it. Thank you, Duncan, for one of those. XME, bar number 8 is the count for its TD9 counts. That says you could get a bottom that forms between today and next Tuesday out there. The weekly time frame chart shows that we're trading back inside its profile. It has a buy zone that is between 59.13 and 60.52. So right now we're trading at 62.86. Today's bar number 8. Perhaps it's going to target that 60.52 level out there. And on a monthly time frame, at the end of the month, you could form a Rhodes Momentum Indicator top. That would then signal that we would head back towards 55.54. Too early to make that call. You are coming in again. The daily may form that 89 count bottom between today and or Tuesday out there. This is going to be 2 weeks to the downside. The last couple of weeks here in the XME, we've had 2-week moves, and then we've seen a rally, at least all the way. That takes us through about June. So June, July, August, for about half a year out there. So maybe want to pay attention to that as well. But I would say it looks like you're nearing a bottom that would form by Wednesday of next week, and that's on the XME. Dunk wants to take a look at what is it? Where'd it go? Steve-O, can you please FTNT, Fortnite. So we're going to put up FTNT out here. It's going to take a moment to populate. And then we've got SBLK. I think that's a bulk shipper. So we'll take a look at that. With regard to FTNT, Duncan, you've got a Rhodes Momentum Indicator top. You got a big old bearish engulfing candle that confirmed that pattern on the trading day of December the 9th. Now what we have is just a consolidation with inside its profile. You've got a little bit of a buy zone between 94.08 and 96.19, and then the sell zone, if you will, is the top of its profile at 100.40. Rhodes Momentum Indicator top, consolidation with inside the daily profile. You don't have any kind of a top. First, let me take that back. You probably have a sell the D point top. Give me a second here. You do. So you have a sell the D point top that formed with this bear shooting star candle the week of November 15th. That high is what you're going to want to watch. That high is at 100.59. If price closes above that, it'll negate that signal, and you're off to the race to the upside. You do see that the TD9 count pattern is going to go ahead and complete today. However, it's not a valid TD9 count. When I say valid, bar number 6 of this count is what made the high. We want that forming on bars number 8, 9, or the bar following 9. That's the weekly chart for Fortnite. If we take a look at the monthly chart says, I see no problems out here. I'd like to continue this rally in longer term. It probably will, but it's dealing with the daily chart right now, and it's dealing with the weekly chart. And the only way that rally gets rolling is a close above 100.59. That would do it. The next request that came in, see here, I'm going live. Peak's request had a lot of eyes in the den. What was the request? I'm sorry that I overlooked. Where is it? Peak. Where are you? Yeah, it's easy for me to do that during a breakout there. So I'll go to the next one. You had Fortnite. How is silver looking? So let's just put up silver out here. We're in the March contract, 2025. Let's go see what silver has to say. Please tell me what Peak was looking for out there. WKEY. Hello. Okay, I'll get to that. Thank you. Okay. We take a look at silver out here. What you don't like about silver, it is forming a new profile, or has formed a new profile, and we're trading below support at 31.16. That would suggest to us that price would go tag its breakout level. It's going to complete that TD9 count top today. So 30.51 is its likely downside price target. Weekly chart's got that TD9 count top. Monthly chart is okay out here, but I'm not looking at the continuous chart. I probably need to put up the continuous chart just to make sure we've got the proper signals out here. So it does look like silver wants to head lower out there, with 30.51 being that likely price target. WKEY. Let me get that up on our screen. So that was one of the requests from Peak G, and the other was where'd that message from Dan go? Good Lord. The other was LAES. So we take a WKEY. What a heck of a day this thing is happening. What a heck of a week this thing has had. And off to a really nice month. So if you're asking where's the next level of resistance, I'd have to go with $10.45. $10.45. We're trading at $6.46 right now. Happens to be the top of that monthly profile. We're above all resistance on the daily and the weekly time frame chart. If I open up the weekly chart to see what's off to the left out here, what's off to the left is a swing point. That swing point takes us to May 26th of 2023. The volume there was 7.8 million shares. On a weekly basis, we're up at 43 million shares. So that's the price target. That high is at the 1045 level. So the upside potential, we take a WKEY, well, how about that? 1045 is the number. That's the top of that monthly profile. That's the high of that swing point. That looks to Stevie like where it is headed to, and that was WKEY. We come back from this break. Let's take a quick peek at LAES and anything else that may have come in that I can get to. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We're taking a look at Seal Square Corp, ticker symbol LAES. Been a rocket ship all week out there. It looks like this has broken out of a large, long base out there and wants to move higher. Now, this is traded higher for 3 consecutive days. We go take a look at the tempo of this. That's the consecutive days higher and lower. Black digits higher, red digits lower. We can see that typically this thing does not trade higher for more than 3 consecutive sessions out there. That takes us back into the beginning of 2024. Yesterday was the 3rd session. So it does make sense that you'd see a 1 to 2 bar pullback out there. That probably would be the extent of it all. If this thing is in a real strong bullish market, which it sure appears that it is, you probably do not get more than a 2-day pullback out here when we take a look at LAES. The monthly chart is irrelevant. I don't really have any data out here that's helpful. And pretty much the same with regard to the weekly time frame chart, although the weekly is trading above its TD knockout breakout level, and that's a beautiful thing. Let's finish off the show by taking a look at Star Bulk Carriers, I believe it is, SBLK. So Star Bulk Carriers, it's an interesting chart pattern out here. If you look at the daily time frame, bar number 9 will form today, complete on Monday. If you look at the weekly time frame, bar number 9 will complete today, could complete that pattern next Friday. The monthly chart is the one that is most concerned because price is now trading below its breakout level at 1712 out there. And that 1712, so the swing point for an A to B equals CD pattern to the downside is from the month of July 2023. And that had 22.6 million shares traded. This month so far, we have 26.8 million shares. That really does, what that sets up is that sets up a longer term A, B, C, D down pattern out there. So you've got daily signals. That's why I said it's interesting, isn't it? You've got bottoming signals on the daily and the weekly. And although the month is not over, we don't know where the month is going to close. But right now, we're getting a signal of a move back to $9.94. Folks, thanks much for all your assistance this week. It's been beautiful. I think I've gone without a cough, without a hack. I'll talk about that next week out there. Maybe others are experiencing what I did. And so have a fantastic Friday, a wonderful weekend, and I'll see you on Monday. Take care. Be safe out there.